This on the sidelines of IFQM Symposium 2025, which is ongoing. My colleague Danish caught up with Tata Steel's Managing Director and Chief Executive Officer TV Narendran to speak about the GST revamp and China overhang on the metal space. Listen in.
A lot has happened from the government's end. We are seeing a clear cut in GST rates. How do you look at this development?
I think it's overall very positive for the economy. While it's not directly impacting the steel industry, but indirectly it will certainly help us if the economy picks up further, consumption picks up. It's also good that it's been cut for industry like cement because that helps bring down construction costs, so which is overall good for the construction industry and good for steel because steel is used in construction. So I think in many ways directly or more importantly indirectly it has a positive impact for us.
So the Indian government is also in talks with the US for a bilateral trade agreement, and also the Indian government is in touch with the EU for a FTA. So how do you look at these developments and what sort of benefits do you see for the steel sector?
I think for steel, US again was not a direct impact because India was not really exporting much steel to the US, but a lot of engineering goods go to the US. So I think it's important from that perspective to have a conclusion to the US-India trade talks. As far as Europe is concerned, yes, I think we need to develop alternate markets. I think our dependence on US as a market has been high across sectors. So I think Europe is a 500 million people kind of market. It's collectively, it's a $23 trillion economy, geography as well. So I think it's important for us to close the EU FTA as well as soon as possible.
So the relationship between the Indian government and the Chinese government is also on the path of, thaw right now. So with China reopening and maybe with the Chinese industries whenever they'll be allowed to enter the Indian market, do you see that development as a positive step for the steel sector, or our markets could be, full of cheap steel from China?
I think steel, for the steel industry, China has always been a concern because China exports a lot of steel, almost as much steel as India produces, and the reality is that the Chinese steel industry is not profitable at these steel prices. So I think that's a concern. The government has taken steps to give us some comfort with the safeguard duties. So I think the positive story more is about China has done a lot of work on innovation, technology, climate change related areas, AI. So I think it's useful for India and China to look at opportunities to work together in many of these areas, and I think China has moved very fast in some of these areas in the last few years. So I look at it more as a larger opportunity than specifically for the steel sector.
So very lastly, with the government giving a lot of relief in terms of GST, and although steel hasn't been given a direct relief, but with a lot of GST cuts, it is expected that the demand would be picking up in the construction sector and other allied industries. So how are you preparing at Tata Steel for the expected sudden demand?
I think we expect H2 to be better than H1 because seasonally also H2 tends to be better. During the monsoon period, construction activity is on the slower side, and the festival season is a good trigger for consumption growth. So we expect H2 to be better than H1. As far as Tata Steel is concerned, we've just added 5 million tons of capacity, which is ramping up, and I think is ramping up at the right time.